What's going on, guys? In this video, we're going to be looking at exactly where your money is going when you invest in something like the SPY, which tracks the S&P 500. Now, for those of you who do not know, the SPY is an ETF, which stands for Exchange Traded Fund, that tracks an index like the S&P 500. The S&P 500 is the top 500 stocks in America. So if you jump onto something like Seeking Alpha, you could actually take a look at how much does the SPY cost. One share is $407. We could jump over to holdings and see exactly how this is broken down. Here it is by sector, but more importantly, we want to know the actual positions. So here are your top 10 positions. They're companies you've probably heard of before, like Apple, Microsoft, Amazon, Nvidia, and so on and so forth. And then these are just the top 10 holdings. And that makes up 27% of this ETF. And then the remainder of the holdings is the rest. That's the other 70 something percent. So what does it look like if you were to invest, say, $1,000 or 10,000 or 100,000? How many shares or how much money is going to each stock? So first, let's look at if you were to just buy one share of the S&P 500. We're actually going to jump over to a Google Sheet so you can see we have the ticker, all the different stocks, and their weight. So we are going to take $407 right now as I'm recording this, $407.60. So if we were to buy one share, how much money would be going to each stock? So we're going to, there we go. So $29.10 will be going to Apple. And let's take a look at the rest. And there we go. So you can see $25 will be going to Microsoft, $10 to Amazon, Nvidia will have $8, Google, well, there's two Googles. One Google will have $7.34, another one will have $6.40. That's just Class A and Class C. Then we have Berkshire Hathaway, that'll be $6. Tesla will be another $6. ExxonMobil will be $5.62. And then Meta would be $5.58. And that will equal, so we're going to do that, will equal $110 will go to the top 10 stocks. And then the rest of the money, the other, that is wrong, equals U times U. The other $296 will be divided up by the other 490 positions. So what about if we had, actually, before we look at $1,000, we're going to do something else. We're going to do the price of the stock, just so you know. Now, how many shares do you actually have of each? So we're going to do price of Google Finance, the ticker symbol, and then we're going to do shares. So we're going to do equals that divided by that. And we're going to bring that down, and we will just bring that to 2 decimal points. So you could see, if you were to buy one share of the S&P 500 at $407, you'll be a proud owner of 0.18 shares worth of Apple, 0.09 shares worth of Microsoft. So you're getting fractional shares of all these different companies. Now, what would it look like if you invested $1,000 into the S&P 500? Now you can see it's a little bit different, and you can see how many shares you have now. And we can just keep going up. This is what 10,000 would look like. Once you invest 10,000, you actually have some full shares. You have 4 shares worth of Apple. You have 2.17 shares worth of Microsoft, and so on. And then we'll stop at 100,000. Let's say you have $100,000. This is how many shares you'll have of each in the top 10 positions. You'll have $27,000 invested in the top 10 stocks, and then the other $72,000 will be in the other 490 positions. So that means when Apple pays out its dividends each quarter, you are going to be getting 43 shares worth of dividends. We could take a look at that really quick. So we will go to Apple, and if we go over to dividends, dividend yield, or actually, here we go, I just had to scroll down. So each share, well, we'll look at this. The last dividend announcement was 23 cents per share. So then we could go even a step further. If it's 23 cents per share, we could do 43 times that 23 cents. So $10. So if you put $100,000 into the SPY, You technically own 43 shares worth of Apple. Apple pays out 23 cents per share. You just made a $10 dividend from Apple on your positions. Now, don't think you're going to be getting dividends left and right every other day because there's 500 different positions in the SPY. The SPY still pays out quarterly dividends like regular stocks. So that will just kind of be stockpiled per quarter. You'll have all the different stocks that pay out the dividends, and then each quarter the SPY will just kind of distribute that amongst all of its shareholders. And we could take a look at exactly when they pay dividends. We'll jump over to TradingView to see when their dividends are paid out. So here we go. Here's the SPY over the past year, and you can see the 4 dividend payments and when they were. So the most recent one was $1.50 per share. And then we could see here, this was $1.78. This was $1.59. And then over here was $1.57. Now, what's even cooler about ETFs like the SPY is, again, it is passive. So each quarter, the S&P 500 or these ETFs, the SPY, is rebalanced. You could actually just quickly Google search how often is the SPY rebalanced, and you can see typically rebalance is on a consistent schedule. Timing could vary depending on your provider, but it usually rebalances each quarter. So right here, and you could dig into any of these articles will show you it occurs quarterly. So if one of these bigger stocks were to kind of fall down in value, Apple right now is at 7.14% of the actual ETF. But let's say earnings comes out and they're really bad and Apple's market cap crashes and maybe Microsoft ends up being the next top stock, then these will actually flip. Or Tesla was actually recently added to the S&P 500. You rewind a couple years ago, Tesla was not in the S&P 500. Obviously, over the past couple of years, it's done really well, and its market cap has gone up exponentially, so it was recently added to the S&P 500. And then you actually have stocks that will drop off the S&P 500. Just the poor performers that haven't been doing good, their market cap keeps going down. They're no longer part of the top 500 stocks in America, and they end up getting booted off of the S&P 500. So what's really nice about this is it's a very passive approach. You don't have to worry about, hey, are my investments good? Should I change it up? You don't have to, because each quarter it's constantly changing. And I think the coolest part that's kind of overlooked is you don't have to worry. There's no tax implications. If the SPY ends up adding more to Microsoft and less to Apple, that means some shares may be sold off from Apple and then some added to Microsoft. You don't have to worry about any tax implications. It's not like you'll get a bill and you'll make capital gains that way. It only happens when you sell the actual ETF. So that's another cool part that I think kind of gets overlooked, because when you're investing into individual stocks, and if it's in a regular brokerage account, and if you want to sell your Apple positions because it's done poorly over the past couple of months, but you are far in the money, you're going to end up paying some form of capital gains tax, whether that's long-term or short-term capital gains. But I'll leave it there. I hope that kind of cleared up exactly how your money's invested when you buy into one of these ETFs. Be sure to tune in to my future videos. I'll actually be coming out with my dividend portfolio, a live dividend portfolio tracker that my subscribers are picking the stocks that we're going to be investing in. If you jump over to my community page, you can see each day for the next 20 days, we're already more than halfway through. I am posting 5 different stocks in each sector, and then we're going to pick the winners. So you can see in this one, JP Morgan won. And we're going to be creating our own live dividend portfolio tracker, and we're going to see if we could beat an index like the S&P 500 over the next year. So it should be fun. And guys, if you like this video, make sure to smash that like button. And as always, I will see you in the next one.